Crypto Caesar Capital. Hope you're all well. It's the 4th of February 2025. So lots happened in the market in the last few days. Huge liquidations, actually more liquidated in the market in the last few days than in COVID, in fact, in US dollar terms. And we'll have a look at that in a moment. But the first thing I want to say to you guys is, I feel when I look at Twitter or X and I go onto social media, I see a lot of people feeling a lot of pain at the moment. And at first blush, anyone with a portfolio that you can see on the screen will think, why are they feeling the pain? My portfolio looks pretty good, to be honest. And it's probably because their portfolio is nothing like the portfolio that you see on the screen. Most people, unfortunately, on X and social media have portfolios of just altcoins. And that's a really, really bad way of managing your risk and playing this game in the proper way. Now, if you went to Wall Street, they would probably offer you a standard 60-40 portfolio, bonds and equities. And I can guarantee you that a lot of the equities in that portfolio would not be micro-cap equities or basically penny stocks. A lot of the equities in that portfolio would be giga stocks like Nvidia, like Google, Facebook, Apple, household names that people have heard of. So if that sort of way is applied in Wall Street, where people make a lot of money, then that balance of risk should be applied in crypto. And I say to everybody in my group that you should have a portfolio that looks at least like something like this. You need at least 50% Bitcoin in your portfolio. My portfolio has more than 50% Bitcoin. It's more like 70% Bitcoin. But you need more Bitcoin in your portfolio. It needs to be at least 50% because that is the hedge in your portfolio. And if you look at the charts of altcoins since, say, September 2023, you will see a lot of them have struggled to keep up with Bitcoin. Bitcoin is the strength in your portfolio, and that is why you should have at least 50% Bitcoin in your portfolio. Then you can add some alpha to your portfolio by adding some Ethereum, which generally outperforms Bitcoin. I know a lot of people are going to say in the comments, oh, well, Ethereum isn't doing very well this cycle, et cetera, et cetera. Well, it will, and it will come through. And you've got to remember that Bitcoin has the biggest inflow of ETF volume, but Ethereum has the second largest ETF inflow of volume. And that will probably remain the case for a considerable amount of time. And you've got to remember where Ethereum is. It's number 2 on CoinMarketCap. It will probably remain number 2 for a considerable amount of time. And it has a huge market cap compared to the rest of the altcoin market. It is the giga altcoin of the altcoins because it has the largest market cap. It has the largest amount staked. It has all of decentralized finance. Most shitcoins are built on the ethereal virtual machine. I don't need to go on, but that's why you should have Ethereum in your portfolio. I know it's a bit boring, 50% Bitcoin, 25% Ethereum, but it works. And in fact, 70% Bitcoin and 30% Ethereum is in fact the best Sharpe ratio that you will get in crypto. And if you don't know what the Sharpe ratio is, have a look at it. It's really important. And it in fact punishes volatility. So 50% Bitcoin, 25% Ethereum, and 25% altcoins. Now, this is where it's quite important that you spread the risk. Excuse me, I've got a cough. You spread the risk with the altcoins by having, let's say, for example, you go for 10 altcoins, at least 5 of those altcoins should be blue chip altcoins. So within the sort of top 20, top 25 of CoinMarketCap. So your Solanas, your XRPs, your Dogecoins, etc., those sorts of altcoins. And if you look at those altcoins in the grand scheme of things against the rest of the altcoin market, they've actually performed quite well compared to some of the altcoins that are not in that top 25 sector. And then once you have identified 5 decent blue chip altcoins, you can then identify 5 newer projects. And it's those newer projects that you're going to take the most risk with. But it's with those projects that you might get the biggest gains from. But you don't need to put too much money or too much risk onto one horse, because if it doesn't work out, then it doesn't matter, because you've got the rest of your portfolio. You've got 50% Bitcoin, you've got 25% Ethereum, you've got the 5 blue chip altcoins. Sometimes it works out, sometimes it doesn't. And a good example is Sui was one of the newer projects that we looked at and we decided to add to our portfolio. That's done great. I think it's up 1,000%. Some of the other newer altcoins haven't done as well as that, but they've done okay. But it's all about balance. And when you have a good balance in your portfolio, you are essentially exercising good risk management. And that's what it's all about. At the end of the day, the people that tell you that they get rich in one cycle from $5,000 are either lying to you or they just got lucky. Okay, it's like going to a casino. Everyone gets lucky in a casino from time to time, but 99% of people who go into a casino, they lose, right? When I go to Las Vegas, I say to myself, right, I've got $2,000. I'm here for a few days. That's all I'm going to spend. And I accept to myself when I walk into the casino that the likelihood is that I'm not going to walk out of the casino with my $2,000, but I'm going to have a good time, right? So good risk management works, okay? And it takes time to build a good portfolio, you know? And people with small amounts of money can make good gains out that money through having a good balanced portfolio and being in the market for a little bit longer than 5 minutes, okay? All right, let's move on to the next. Okay, before we have a look at the charts, I just want to do a quick shameless plug to the group. If you want to learn more about crypto, if you want to learn more about risk management, if you want to have a good balanced portfolio, if you want to have, you know, the support of real people who actually trade the markets, who've been involved in the markets, both, you know, traditional finance and crypto for years and years, then come and check us out. Drop me an email or the team an email via the website. It's $499 for 1 year for the premium membership, and it's probably going to be the best money that you will spend this year if you're serious about crypto. So either drop us a message via the website, links in the description, or you can DM me directly via Twitter. Make sure you DM the correct Crypto Caesar with the blue tick, not the scammers. Right, let's have a look at the market. So Bitcoin is in a range. Okay, the range is pretty obvious. The chart is in front of you. Bottom of the range is around about 91K or 90K and change. Okay, top of the range is about 108K. Bitcoin has been in this range now for 49 days. Okay, so what Bitcoin is doing right now is it is consolidating in a range. And when assets like Bitcoin consolidate in a range, all that is happening is the big players are just packing their bags and getting ready for the next move up. It doesn't happen all at once. There needs to be time for chill, time for consolidation, time for the market makers to get their shit together, and, you know, for people to get in position. And you know the old adage, the longer the base, the higher in space. So we're just chilling out at the moment, consolidating, chopping around a bit. We've passed the midpoint of the cycle. If you don't know what that is, go and have a look at my other videos. But we are certainly in a bull market, and I have absolutely no concerns at the moment, particularly because I have a good balanced portfolio and I haven't felt half as much pain as a lot of people who are just solely in altcoins. So Bitcoin is trading now in a range, and my suspicion is that at some point, fairly soon, it's probably going to break out of this range. but we just have to be patient. And when Bitcoin gets to the bottom of this range, it's always, in my view, a buying opportunity. Now, could it break down through this range? Absolutely, it could. Do I think it's going to break down through this range? I don't think so. And the reason why is because every time it gets to the bottom of this range, big volume comes in and buys it up. Okay, there are a lot of people defending this area. Okay, there is a lot of interest within the market around about this area. So that area of support is at the moment being heavily defended, and that will continue to be heavily defended until it's not. And my view is that there is the potential, of course, of it breaking down through this range, and we could visit 75k. That is an absolute possibility. But I think on a sort of percentage basis wise, I think that that is a lower percentage outcome than it remaining in this range and breaking out. I think the higher percentage outcome, i.e. more than 50%, so more probable than not, it's going to remain in this range and break out of this range at some point. But you know what happens in crypto? When Bitcoin sneezes, the altcoin market absolutely shits the bed. And that's exactly what happened the other day. Bitcoin basically dropped, I don't know, what was it? It was about 8% or so. And the altcoin market absolutely got smashed. XRP 34% down, Dogecoin 24% down, Sui 25% down. But all of those altcoins that I've just mentioned have actually bounced back pretty well. Okay. So we're just in a range. When Bitcoin sneezes, everything else panics and goes down a lot more. Nothing to worry about at the moment. The interesting thing when looking actually at the market, and it's one of the things I said right at the beginning of this video, was, and I'm now looking at the crypto total market cap. So this is the entire market cap of crypto, or at least the top 100 altcoins, I would imagine, or 150 plus Bitcoin and Ethereum. Is that the liquidation wick to the downside was quite significant. And if we actually have a look at how deep that wick went, you know, it started off, the market was about, well, let's have a look right from the top. So at the top, it was about $3.67 trillion in the market. And by the time it got to the bottom of its wick, it was about 2.83 trillion. So it was about 850 odd billion wiped off in one or a couple of weeks in crypto. The actual wick, I think, was about 260 billion, but that is a huge amount to be wiped out. Now, you might think that, oh my God, that's actually really, really concerning. Well, actually, it's not. If you look at COVID, what happened in COVID, the market was sitting at 288 billion. When the COVID news came out, it fell off a cliff and came down to 108 billion. So, you know, there was about, I don't know, 180 billion knocked off the market in one fail swoop. 180 billion was actually less than what happened, or the wick the other day with the market. So in the grand scheme of things, this liquidation was pretty significant in US dollar terms, not in percentage terms, but in US dollar terms. And that is actually quite positive, because we are still looking at the this chart, the total market cap. We are still above the all-time high. We are defending it as support at 3 trillion. But, the market drove down below it, but it was quickly bought back. And it's positive also because lots was wiped out the market. You know, there were lots of leverage was wiped out. Lots of degen traders were wiped out. Idiots wiped out. Altcoin lovers wiped out. Okay. And that cleansing of the market, in fact, is a good thing, because it means it wipes everybody out. It wipes the slate clean, and then we can move forward and continue to the upside. So I'm not at all concerned about that. And I think, in fact, it's quite positive that there was that cleansing of the market. Very similar to Total 2, which is the total market cap excluding Bitcoin. And you can see Total 2 is actually sitting right on this area here, which was once resistance, but it is now sitting on it as support. So looking pretty good there, looking quite normal there as well. So, you know, in the grand scheme of things, guys, everything looks fine to me. Obviously, it was all a bit of a worry and a bit of a panic, and everyone's talking about tariffs and how tariffs are going to affect this, tariffs, that, tariffs, that. Well, I can tell you something about tariffs. These will be very, very short-lived. And also, I think a lot of the market is overstating the issue with tariffs. I mean, for example, Mexico and Canada are already leaning in with Trump and have agreed a 30-day extension to the tariffs, or you know, a cease to the tariffs for 30 days whilst they negotiate. And I'm sure that will be sorted out. China will probably lean in and they'll probably agree something, I would imagine, in the end. Same with Europe. Not a big deal. Markets will be fine. The only issue at the moment really is liquidity. So we need to see what's going to happen with the Fed, what Trump's going to do about liquidity. But, you know, a trader, I forget his name the other day, said something really quite poignant, I thought. The spice must flow. And he's absolutely right. If you've watched June, you will know exactly what I mean, because the spice must flow. The spice is the US dollar. It is the liquidity of the world, and it must flow for us to continue. And it will flow. It's just a matter of patience. So for me, everything looks absolutely fine. In the longer term, as you know, I don't really like to do price predictions. I'm more of a timer of the market rather than a price of the market. I prefer to time it and feel as though, okay, we're getting a bit overheated now. Now's the time to start taking some profits and taking some chips off the table. Now's the time to start setting some stop losses, etc. So I'm more of a timing of the market really than I think the price is going to go to X, Y, and Z. However, an interesting exercise that we considered the other day in the group was this. If Bitcoin were, for example, to go to 200K, I know a lot of people are going to say that's ridiculous, that's crazy. It's not that crazy, and it would actually be a diminished return from bottom to top, and that's how you should calculate a return, not from breakout to high, from the bottom of the market low to the market high. That would be, in fact, a diminished return to 200K. Now, if Bitcoin were to reach 200K, and we've got this range here, which Bitcoin seems to have respected for a considerable amount of time, many, many years now, at least 1, 2, so this will be its third cycle in this range. If Bitcoin were to go to 200K, and were to then drop to the bottom of the range, okay, now obviously the bottom of the range would, let's say, it follows the 4-year cycle. Bottom of the range, let's say it would be kind of out here somewhere. So it would be more like October. So let's do this properly. So here, so let's say it follows 4-year cycle. That means that obviously we've mapped out the cycles here. This is cycle low 2018, 4 years later, cycle low 2022. So we know that was, well, sorry, let me start this again. Right. So 4-year cycles are mapped out. We've got 4-year cycle, low to low to low, or 4 years. If it continues to follow the 4-year cycle, it would be the low would come in around about sort of Q4 2026. So here we go. It's mapped out for us on the cycles basis. Turn that black. So if Bitcoin were to hit 200K and then retrace down to the low, the bottom of the range, that would be about a 58% drawdown. okay, which I think would be about right, maybe a little bit deeper. I mean, you know, we have had deeper drawdowns. I think the last drawdown from high to low is about 76%. The previous was about 80%. The previous to that was 82%. So the drawdowns are getting smaller. But if we were to increase the price of Bitcoin, say up to 235K, which is very, very close to the top of this range, that would be a drawdown of, when we get to here, 61%. So top of the range, the drawdown from the high down to the low would be about 70%. So 200K, 235K, 250K, you know, it's not completely out of the question. And don't get me wrong, if Bitcoin gets to 150K and I think that's it, I'd be more than happy with that. But 250K or 200K is not a diminished return. Or it is, sorry, a diminished return. And if it were to get to the top of this range and fall down to the bottom of this range at 250, that would be about a 70% drawdown, which is about right for Bitcoin. So make of that what you will. Who knows what the price is going to be? But what I do know is that, and I say this with a fairly high level of certainty, that the top is not in for Bitcoin yet. We have got a super pro crypto US government. Lots of things are going to be happening with ETFs and options very, very soon. And I speak to people on a daily basis who are in this industry. I go to conferences, I speak at conferences, I speak to the people who matter in this industry. And I can tell you that there is a lot coming in the next sort of 3 to 6 months. It's going to be really, really big. So in my view, from an analytical point of view, on a 4-year cycle basis, on a chart basis, on all the indicators I'm looking at, my view is that we are still in a bull market. The top is not in. I don't know where the top's going to be. I don't know what the price is going to be. But if Bitcoin got to 250K or 200 plus K and dropped down to the bottom of this trend line, then that wouldn't be surprising to me. I mean, even if it got to, say, 200K, right, and then drop down to this area here, which would probably be heavily defended, so the previous all-time high, that would be a 63% drawdown, which is about right, you know? So that 200K area, I think, isn't a stupid target to suggest. Anyway, that's all I've got to say today. It's been a bit of a long video, but I thought I would do a longer one today because I know there are a lot of people at the moment who are a little bit worried, a little bit concerned. And that just always goes back to have a balanced portfolio, manage your risk properly. And if you want some help with that, come and check us out. It's only $499. You know, it's probably a cup of coffee every day. For a year. It's nothing, right? And we can help you, and we can help you with all of those things. Anyway, that's it for today. I hope you are well. Please subscribe to the channel, like the video, and I shall see you on the next occasion. Thank you very much for listening. Bye-bye.